Hello, I am Beck Hayden. I'm the JVSG lead here in the DOL Vets Office of National Programs, Grants and Training.
Hi, Beck.
Hi, hey everyone. First, thank you all for joining us today. Really appreciate the time you spend with us on these JVSG listening sessions. So this one is our KPMG's Tips for Avoiding Audit Findings listening session. So it's intended for state veterans coordinators and financial staff and really anyone who might be closely involved in one of the audits that they conduct. So vets contracts with KPMG as a result of GAO findings that vets need to provide better oversight over how states are spending JVSG funds to ensure compliance with JVSG program legislation and with the uniform guidance. So they've been conducting these audits now for almost 2 years, and we've all learned a lot from their work. So we've asked KPMG to share some of the findings, some of their lessons learned for us. We really hope that those of you who haven't yet been involved in one of these audits can take something away from the session that'll help you better prepare for when that time comes. Also, really hoping that some of you here today have already been through one of these audits, because that insight will help your colleagues in other states. It'll also help us all just understand better how these audits are going and any questions that arise as a result. I think that's it for our intro this afternoon, morning, wherever you are. And I will gladly now turn it over to KPMG to take over the presentation.
Great, thank you, Beck. We certainly appreciate that warm introduction and wanted to say hello to everyone. If you can go to the next slide, please, Lucy. So my name is Wendy Allen and I'm a Managing Director with KPMG, and I'm in the federal audit practice and been working on financial statement audits and performance audits for about 19 years with KPMG. And I've been fortunate to work on these vets audits since the beginning, and happy to be back today to for our session. I'll pass it over to Alan and Lucy so they can introduce themselves.
Great. Thanks, Wendy. And again, good afternoon, everybody. Happy to be here with you all to talk through some of the things and some helpful hints here. Alan Devine, some of you may recognize me from those who have gone through the audit process, sitting in on some of the calls and in the update sessions. I've been with KPMG 20 years. Over that time period, I've focused primarily on federal financial statement audits and these type of audits as well. Was with Wendy when we started this work a year and a half, almost 2 years ago now. I've been serving the Department of Labor and other capacities as well for the last 5 years. So excited to be here just to share some of these hints and help the process move smoother as we move along here. Lucy, over to you.
Hi, my name is Lucy Rudder. I'm a manager in the federal audit practice. I've been with KPMG about 8 years and been supporting the vets audits for a little over a year now. So looking forward to sharing some information on this session.
Okay, well, I'm going to be kicking it off today. Just wanted to go over our agenda so you had some idea of what we were going to be covering. So for the first module, we'll be looking at our audit overview, and we'll be reviewing the objectives and scope of our audits. Then we'll be providing some additional information about what to expect from our audits if you have not already gone through one, and how to best prepare as a summary of, including a summary of document requests that we'll likely be asking for. And this is no different than what we've shared before in our listening sessions, but really to set the stage for these that are new to our audits or perhaps serve as some reminders. In Module 2, I'd like to say that meat and potatoes of our presentation today will be covering common findings that we've identified And our intention really is to take a deeper dive into the findings and provide you some context into what we've been seeing, and share how we identify the findings, kind of what documentation we've seen, as well as things to be aware of for you at the grantee level to ensure continued good financial management practices. And then we'll be closing out our debrief by providing some leading practices. And, we'll be weaving in some of that feedback when we go through the example findings, but then have some additional reminders and leading practices over financial management and monitoring at the end. I know we, definitely encourage questions. Please, if you're all familiar with Teams, you can raise your hand and feel free to come off mute to ask, or you can feel free to, we are going to be monitoring the chat as well as we go. And I think our plan is to kind of stop at every section and module so you have an opportunity to ask questions related to that specific section. So our next, as we dive in, module 1 is our audit overview and reminders. So as Beck had alluded to, VETS has engaged KPMG to conduct performance audits over these JVSG grants and really to determine compliance with the terms and conditions and uniform guidance. And we also discussed, we've conducted them over the performance year 2020 and currently wrapping up our option 1 work, which is covering performance year 21. And we do, as this states, we perform our audits in accordance with government auditing standards and consulting standards, and do issue a performance audit report. But we try to, don't like to confuse the fact that, people hear performance, they think one thing, but we are just wanted to reiterate that we are focused here on financial information only. That's kind of where our test work procedures are designed to cover. You may be familiar with the roles and responsibilities audits that are conducted separately, and that is not this. This is primarily focused on financial information, and so you'll see our kind of what our plan is and how that aligns with that in future slides. We are also not issuing an opinion. This is not a financial statement audit, but we do provide findings and recommendations as part of our reports if we do identify findings. And as Beck said, VETS has engaged us to perform these audits with the end game that there's opportunities for improvements that are identified, lessons learned are captured, and training is developed. And so that's why we are here today. The next slide, please, Lucy. So objectives and scope of our audits, if you're not familiar, we do, these are the specific areas that we focus on. And as you can tell, probably not surprised, they're the bulk of the grant reporting, things that you are reporting to VETS as expenditures. I will just clarify that the reporting does include our test work over our views over your quarterly reporting. And so we dig a little bit more into that and kind of compare to underlying transaction details. So when we say reporting, we're also covering, is it reported quarter over quarter correctly, but also is it in the right bucket and in the right categories? And also, is it in the right boxes? Because, these forms, there's a lot to complete. And so we look at all of those, and we'll definitely be going into that further in our future slides. So audit preparation. So, the first step to a successful audit is preparation, right? And so these bullets are here to provide some helpful suggestions. To set the stage, we conduct walkthroughs at the beginning to gain an understanding of your process. And we understand that each grantee is different, has different systems, has different processes. And so this serves us well. So if we understand your process, and obviously makes for a much more efficient and effective audit if we're asking the right questions and gaining in that initial understanding of your processes in place. You'll hear the acronym PBC, prepared by client. We send this list out with our initial notification letter when you get notified that you are being lucky enough to be chosen to be audited. And this really does ask for those overarching documents, and we'll get into a little bit more about the documents requested, but this is overarching documents that we ask for at the offset, so we have that initial understanding of your processes. So when we do actually, it comes to time to actually have that walkthrough with you, we already have that base knowledge. And we find that that helps because then we can ask more relevant questions in the walkthrough as opposed to starting from scratch. And you will see, establishing, we tend to establish periodic status meetings as part of our audit, just to kind of keep in touch and keep everyone apprised of the status of the audit. Also gives us an opportunity to ask questions, but also keep, kind of follow up with any outstanding information or sample items. And we are, as we are committed to keeping everything on track on our end, we also ask the same of you. What you do understand, there's competing priorities, and so I think communication has served us well throughout, which is why we like those periodic status meetings, usually on a weekly basis, just to make sure that we're all kind of on the same page on what is, the status of everything. So our documentation requests are consistent from audit to audit. There are certain items that we'll always request that will, be listed on the next slide. Again, these are overarching documents that help provide us insights into your processes and help us identify relevant internal controls, which in turn helps us know what to expect when we start to test our sample items. Some of the items include, as written here, our written policy documents and any other kind of other relevant audits that may have occurred. And then also, I think the most important one, even though it's at the end, is our transaction detail. It's one of the most important PBCs that we get, mainly because that's what we use to select our samples, but ultimately is also what you use to as your underlying kind of support to create your, or it is escaping me, to prepare, thank you, your reports every quarter. So we expect those quarterly reports to be supported by this transaction detail. And so that is key that we get that reconciled beginning of and it's one of the more important PBCs that we get. So we have a path forward on picking our samples and also comparing what you're reporting in your transaction detail to what was actually reported to vets. So again, we'll get into that more. This is just a highlight. And then this next is obviously documentation requests, and this is a long list. I won't read them all, but just wanted to kind of emphasize that, obviously this JVSG is heavy payroll. So in turn, we do have a lot of requests related to payroll. We select samples, usually based on the payroll registers of, people that are charging the grant. And that does then include all kind of related payments to them, including, payroll, like their actual pay, any additional payments that go to them, including benefits. And so we in turn ask for pay stubs, timesheets, benefit election forms, as well as evidence of the current rate, which may consist of like an offer letter. So we just want to emphasize that because that's what's going to be coming down the pike when we ask for support for samples. And then we'll also, we'll be talking about indirect cost support in future slides, but having a clear understanding of your indirect cost methodology and and how the pools work and then the related calculations is key. And so we essentially want to be able to see the audit trail for the underlying support for those charges. And so that is also additional support that we request. Incentive awards, is, that justification for any incentives that go out and then any evidence of approval for those is usually required. And then just from an administrative reporting perspective, we request typically quarterly reporting documents, just those ones that you send to vets. And we usually, for the period in scope, we ask for all of those related documents, but we also want to see any related modifications and changes, any subsequent changes that you may have made. And we do expect that these items should be readily available and also reconcilable to the underlying detail that I discussed earlier. So the next slide we're going to be is going into module 2. So I will pause there to see if there's any questions about what to expect for our audits and any documentation questions. I know that we're going to get into examples, so but just wanted to open it up in the chat. Nope. Okay, well, like I said, there'll be plenty of time to ask questions. Okay, so module 2, we are this is an overview. This illustrates kind of what we've found so far. It's like the common JVSG findings, and this is based on our base year, which we did 12 audits, and then this also includes three of the audits that we completed thus far in this performance year. This graph obviously illustrates where we've identified the majority of our findings, and there can be overlap between some of the categories. For example, one finding could cover issues with both allocation and supporting documentation, but we try to differentiate that here so you could get an idea. And as you can see, reporting is where we see the most findings, and we'll be diving into some of those examples in the next module or in the next few slides, so you can see where there are some items that have tripped up people and resulted in findings. Just to kind of set the stage, I know Lucy and Alan are going to be going over some examples. So for the 3 categories of findings, we thought it would be most useful to kind of take those, where we're seeing most of the findings and dive in. So for the 3 categories of findings, allocation, supporting documentation, and reporting, we'll be reviewing real life examples, and then taking a deeper dive by looking at these 5 key topics. And so we'll be providing the example finding, and in our audit reports, we include what we refer to as the condition, which is the description of the finding, and also include the criteria and the requirements as it relates to the condition. So all of our findings refer back to that guidance, because that's kind of what we are auditing to. And so I will just say that it's important to know, as the grantee, to know your criteria, to be familiar with the hierarchy of the guidance. And in the terms and conditions of the grants, it's in section 1, it's referred to as the order of precedence. And so if certain guidance is inconsistent, there's a clear path forward on which one takes precedence. So if you're not already familiar, I suggest you look at that. But our criteria, what we've included in these examples, is the criteria that we are auditing. We'll also be going over the procedures that identified the issue, so you have an idea of what we're looking at, and then also showing some examples supporting documentation and what we would have received to conduct the test work. And expectations just refers to kind of, usually align with what our recommendations are, and really is, what does good look like, taking into consideration the criteria. And with that in mind, then we'll provide some questions for you to ask yourselves to help identify any potential issues or areas for improvement as it relates to your grant financial management. So I will pass now over to Lucy so she can take us through some examples, and I believe we're starting with reporting.
So the first category where we have common findings that we wanted to provide some additional information about is reporting. So like Wendy said, we'll start off with providing an example finding and then go through some example procedures we do along with supporting documentation we look at. So to start off with reporting, we have one example finding here that is a pretty common finding. I think we've had at several grantees. So the finding is actual expenditures different from reported expenditures. And that's when we are comparing the expenditures that are in the transaction detail that you provide to what was reported on the quarterly reports, the quarterly FFRs and EDRs. We do have the criteria or requirements listed below. So there is the Veterans Program Letter that has the requirements from vets about reporting. And then there's also the uniform guidance that has reporting should be accurate, current, and complete. So those are the two criteria around most reporting findings. We did want to provide a few other examples of reporting findings since it is one of the larger categories where we did have findings. So another area on reporting is we sometimes see incorrect classification of costs. So that's where the expenditures are classified within the reports. So in this example, we had certain sample items selected for testing within our indirect cost test work, but based on our review, they were actually direct costs. So they were being incorrectly reported as indirect costs. So that led to the finding. And then we have a few other examples where actual expenditures differed from reported expenditures. So one example is incentive award amounts that were not reflected appropriately in the EDR reports. So there is the sections on the EDR to report incentive awards, and the amounts that were spent and the amounts that remain unliquidated. So there was some inaccurate reporting for one example. And then another one was personal services and benefit costs that are reported on the EDRs. Those did not accurately represent the actual payroll and benefit expenses that we found in the transaction detail reports. So when we're looking at reporting, our first procedure that we do at the start of the audit is to reconcile the transaction detail, so the expenditures that are listed in there, to the quarterly FFR and EDR reports. And that helps us verify that we have the correct population of transactions within the transaction detail and to break down to the different categories such as, payroll, indirect, etc. So when looking at this reconciliation, we're looking to verify that the expenditures in total agree between what's on the reports and what's on the transaction detail. And then also by reporting category, those also agree. So next, we're going to look at some example supporting documentation that we request and use when we are looking at reporting. So the first two items are the FFRs and EDRs. So the quarterly reports, this is just a blank copy as an example. The other main item is the transaction detail. So we ask that the transaction detail be provided in Excel format, and it's just a summary of all the transactions that were charged to the grant. So we use various columns within the transaction detail to help us reconcile reporting, and understand the population of expenses. So it's important that the transaction detail has something like an account number or description so that we can understand the type of expense, a date that helps break down to the different quarters that are reported to vets, and then an amount, and then also the grant or program the expense relates to, so between DFOP and LEVR. So this is just a short snip of a transaction detail on the slide, just as an example. And then other support that we look at. So we may also make inquiries over the reporting process. Like what Wendy was saying, we do a walkthrough at the beginning to understand the process and your different procedures over the different areas. We also request the written policies and procedures. And then we may also look at incentive award reports if we're trying to tie out the incentive awards that were reported quarterly. And another main item would be adjusting entries due to timing. So we understand sometimes there can be timing differences due to when information is available. So sometimes there may be reconciling items between the quarterly reports and what we see in the transaction detail. So it's helpful if we are able to receive those adjusting entries or understand any timing differences up front when we're reconciling reporting. So next we have an actual example of one finding and that relates to when actual expenditures were different than reported expenditures. So the first two boxes, we have a snip of an example FFR and also an EDR. And you can see for those two items, the total amount of expenditures agreed between the reports. So it was that 2.3 million amount. However, when we looked what was actually in the transaction detail expenditures to date, it was an amount different than that. So that 2.2 million amount, which resulted in a variance of around 45,000. So that did lead to a finding because the expenditures that were reported were higher than what was actually in the transaction detail. So next we'll look at some expectations. So we're looking for total expenditures per the quarterly reports should agree to the transaction detail, and that you should be able to provide a reconciliation or be able to show how the amounts agree from the transaction detail back to what was reported to vets. We also review that, the specific reporting categories that are on the quarterly reports agree. So such as the personal services and benefits on the EDR, incentive awards, that amount that's on the EDR, and then the indirect costs line is from the FFR. So we do compare the amounts that are reported on those lines to what's in the transaction detail. And then the last expectation is you should be able to provide an audit trail for the underlying expenditures. And we will get into more examples of supporting documentation later on and what we kind of look for. And then our last slide on reporting is we do have these potential areas for questions to kind of ask yourself as you're going through the reporting process. So these are high-level analytical things you could look at to consider: is the reporting complete and accurate and in line with what you are expecting? So the first bullet point is looking at the payroll numbers that are reported on the EDR. So on the EDR, you report the positions as well as the related expenditures for personal services and benefits. So thinking about, are you aware of any decreases or increases due to staffing, which might change that quarterly reporting amount? Are you aware of any vacant positions or any other special circumstances that might have affected the amount being reported to payroll? In FY20, we did have several grantees where the JVSG employees started splitting time with unemployment to help out with that area due to the pandemic. So we did see some changes in the amounts being reported for those quarters during that year. And so we saw decreases there. And, just thinking about if the numbers of positions decreased, then you would also expect the expenditures for that quarter to decrease in that area. Another area you could think about is any variances with the prior period, and if the variances are in line with what you were expecting. You could also look at, what you're reporting compared to the budget expenses or budget submission, and to see if there are any variances there that you need to consider. And then finally, on the FFR, looking at if there's any inconsistency of the indirect rates that are on the FFR, or if you have a NICRA agreement applicable, if that rate is consistent. So that is our last slide on reporting. So I'll pause again if there's any questions on reporting. Okay, looks like we will move on to our next main topic, which is allocation of direct and indirect costs. So once again, we'll start off with some example findings. So we do have a finding for direct and also one for indirect. So under direct, we have the finding which was there were inaccurate allocation methods used in the allocation of direct costs. So at this grantee, direct costs were allocated based on occupied space used by each program. And then during our sample test work, we had 3 direct cost transactions that were not accurately allocated. So one was because the incorrect occupancy rate was used, and then the other 2 were just unsupported. And then for our indirect finding, we had undocumented allocation rates were used in the allocation of indirect costs. So at this grantee, the costs were allocated based on employees' time distributions for the month. So like the direct labor hours charged to the grant. But this calculation was performed automatically within the financial system. So that grantee was unable to provide support for the basis of the allocation. So we were unable to receive any support to be able to recalculate that cost. So next we'll look at the criteria and requirements, and this was applicable to both findings. So we have the uniform guidance listed. So the uniform guidance, just explains the proper allocation of costs. And then there's also the GAO standards for internal control, which states that documentation should be available for examination. So those are the 2 criteria applicable for these areas. And next we'll look at our audit procedure that identified the issue. So when we're testing allocated direct or indirect costs, our first step would be to understand the cost allocation methodology. So we would start off with the walkthrough to understand the methodology, the different systems that might be used, the different allocation base, and then we would also request the cost allocation methodology procedures. Next, we would be requesting the supporting documentation related to our selected direct or indirect transactions. So we do a sample of these areas. So we would be requesting an invoice or support for the transaction that's being allocated out, so that underlying transaction. And then we'd also be looking for support for the allocation percentage that's used based on your approved methodology. So below are some examples that we've seen. It could be based on full-time employees. So that would be taking the full-time employees for the program and then dividing it by maybe the total employees in the department. direct labor hours, that would come from the timesheet entries and how the employees are coding their hours on their timesheet. So that would just be taking, those hours that were charged to the grant and then dividing it by the total hours overall. It could also be based on occupancy. So like looking at the square feet that the program's using divided by the total, or there could be other agreed upon bases. And then our final step would be that we would recalculate the allocation and agree that amount into the transaction detail. So that usually looks like taking that underlying transaction amount and then multiplying it by that allocation percentage. And then we should be able to see that amount in the transaction detail or understand how it flows into the transaction detail. So next we're going to go into an example of an allocated, I think it's an indirect cost that did have sufficient supporting documentation just to show the process and what we would be looking for. So first we have this underlying transaction that's to be allocated out. So it's an invoice for IT services for the department overall for $267,508. So this is the support for the underlying transaction that's being allocated out. We can see the total and what it's for. Next, we'd be looking to receive supporting documentation over the actual allocation percentage. So for this example, it was based on direct labor hours. So we received this document, and this is just a portion of it. But it shows there was 352 direct labor hours related to consolidated labor and DVOP. And then we divided that by the total hours that was within the department, which was that 322,634 amount that's at the bottom. And that gets us to our allocation percentage, which is the 0.109% that'll be applied to that invoice. So we get to our last step now, which is the actual recalculation of the indirect expense. So to do that, we take our underlying transaction, which is the 267,508, and that came from the invoice. We multiply it by the allocation percentage that we got based on the direct labor hours, and that gets us to the total amount allocated of $291.86. And then we were able to trace that allocated amount into the transaction detail. So that's the last table at the bottom where we can see, there was a $291.86 was within the transaction detail. So it was accurately charged to the grant. So for expectations related to allocations of direct and indirect costs, so we're looking for, if you're able to provide supporting documentation related to the underlying transaction and also for the allocation percentage, because we want to be able to recalculate the amount that's being allocated and then able to see that amount in the transaction detail or understand how it flows into the transaction detail. We understand sometimes there are system-generated allocations or calculations, but we would ask to maintain any system printouts for how the system's generating these allocations so that you have support over the amount that's being allocated, and that we are able to come back and recalculate and, verify that the correct amount was being allocated. And then some potential questions over the area of allocation of direct and indirect costs. So, thinking about, do you have the ability to provide documentation to support those system-generated allocations like we just talked about? Also, if there's any change in your NICRA agreement or if there's any change in the approved cost allocation plan for indirect costs. Once again, you could look at if there's any variances with prior period or variances, compared to your planned budget submission. Also if you're seeing any inconsistent indirect costs for each quarters and if that's in line with your expectations. Sorry, I think I got muted. That wraps up our the topic for allocation of direct and indirect costs. I'll pause again if there's any questions over this area. Okay, not seeing any questions so far, so I'll pass it over to Alan for our next section.
Great, thanks, Lucy. All right, if we want to go to the next slide. Lucy, I'm not seeing it change here. Lucy, can you check if the slide's progressing?
Yeah, it's showing the supporting documentation slide.
It might just be a delay on my side then.
Yeah, I'm seeing it too.
You're seeing it as well?
Yep.
So I can...
I'll try moving it. Has it changed for you yet?
there it goes. Yes, thank you.
Okay.
All right, great. So the last area we wanted to talk to you about was some challenges we've seen when conducting these audits in obtaining supporting documentation. So for the first example we have here, this is a situation where we were looking at supporting documentation for a control that the entity had. And so in this case, it was the approval of incentive awards. And so you were going to see in the next slide that we look at documentation both in terms of what you would expect as invoices, contracts, what have you, but also controls over approvals and reconciliations and those type of things. That's the type of supporting documentation that helps us get to the answer we want to be able to see. So in this case, it was a control over the approval of the support, of the incentive award, which was one of those key questions we're trying to determine. Lucy, do you want to advance this to the next slide? There might just be a delay on my side too, Lucy. I apologize.
On supporting documentation continued.
Yes. Is that up?
Yes.
All right. So the example we have here is the supporting documentation for actual transactions. So this is talking about the support for a direct cost or a cost within an indirect pool that we needed to take a look at. And so under both this example and the previous example, which was an example of supporting documentation for a control, the criteria we have here is, number one, uniform guidance, right? That has to be there. It says those items have to be there. But the second item we have here, we reference is the GAO standards. And we're referencing the Green Book standards, which are those standards for internal controls, which do require that entities, federal entities, governmental entities have controls in place to make sure that documentation is readily available for inspection when it comes time. So what we want to do is we want to go over some examples of documentation that we've seen. And again, we've taken some snips of some real example documentation that we reviewed, so you can get an appreciation of what we're looking for. Now, we're going to look at those things that are probably a bit more complex or a bit more outside of just a normal invoice, because that tends to be the easy thing. Everybody understands and is usually typically able to provide an invoice for a cost. But when we're talking about things like service contracts and payroll, those are the types of things we want to show you some examples of what we've seen that's helped us complete our procedures. So Lucy, do you want to go ahead and go to the next slide? Great. So when we're asking for this documentation, there's a couple things we're doing to complete the procedure that we have. So first, we want to get back to that actual document that caused the expense, and you know, things like timesheets, pay stubs, or what have you. But there are other aspects of that we really want to make sure we understand. So as part of our audits, we want to make sure we understand the process that the grantee has and what it is that's causing the transaction to occur. So in certain cases, it may be costs that are being allocated at the state level, those type of costs. Like, what is it that you're receiving that's initiating that transaction that's going to be applied to the grant? So we request that information, we review it, and then our goal is to try to get from that piece of paper, that's the screenshot, that email, if that's where the attachment came from, and get it back to that transaction detail in the transaction detail that we spoke to earlier when we're trying to reconcile that to the reports that are sent in. And then the last thing we do is we look at that expense, that documentation, and we ask ourselves, is that reasonable? Is that appropriate for this grant? So without having that core document that has that description that explains what the cost was, that might be a challenge if it's just not descriptive enough for us. So we might not understand what's being allocated. So Lucy, do you want to go to our next slide there? So let's start with an example of a service contract. So in this case, the example you're looking here, there's a couple things that we're looking for here. So number one, we can see the time period here. So in this case, it was from November, just for the month of November. So the first of the month to the end of the month there, we saw a contracted amount. So now we're trying to see, you know, we got the amount, we've got the period of when that service was provided. But then what we're also looking at here is we're also looking at that approval for the service, right? So somebody said, hey, this is the service we're signing up for. We agreed to it. We've accepted this cost. So looking for that signature, and you can see that we had that redacted in this case, but that's what we're looking for when we get that piece of documentation. So in this case, when we were auditing this service cost that had been applied to the grant, we were able to receive a contract that described the service, that described that dictated the amount, that dictated the time period, and there was a signature approval saying, yes, we're accepting this service. And that's what we're looking for when we're looking for services that have been provided to the grantee that are being recouped on the grant. Now, if we want to go to the next example, we're going to look at a couple examples for payroll. Because typically, I think what we're thinking about payroll is we're timesheets or a pay stub, maybe the be-all, end-all. But there's actually more that we're looking at. And we're going to start with the one that challenges us the most here, and that's benefit elections. So when we see timesheets and what have you, that tends to be more straightforward. But when we're looking at this grant, we're going that step to make sure that we understand that the benefits that this individual is receiving that are being recouped on the grant, that those benefits were properly selected. And in this case, what we ask for, and I guess in general, what we ask for is the benefit elections form that this individual signed. Now, we understand that this is going to be different by state. I mean, each state may have their own payroll systems, their own benefit election systems, but what we're looking for is to understand what the individual elected for. And is that what is being reflected on their pay stub and then eventually being reflected and recouped on the grant. So here you can see we had the employee, we saw what the costs were that were being applied here for that, and that's what we could tie back when we went to the payroll detail, and we could see that there was that line that said, here's the payroll expense, here's the benefit expense that was also attributed to the grant, and we could tie it back to that information. All right, let's go ahead and just jump to the next slide. So in this slide, we have the timesheets, and one thing we're looking for in timesheets, especially if an employee isn't full-time to the grant, is the breakout of hours that are being charged. So in this case, you can see here that we highlighted a couple of lines on the timesheet, which indicated that this individual's time was partially against the role of a leaver. And so when we see that timesheet, then what we're expecting is to be able to see how many hours were charged, see the total hours for the period, then see their total pay and make sure that only that amount of time that was allocated to the leaver role was appropriately then allocated to the grant. And so if we can see that breakout, that's what helps us understand that. Additionally, we understand that, sometimes there's other grants that maybe this individual is working on. And so seeing that breakout makes sure that only the appropriate time that was for these activities is being allocated to the grant. And without that breakout, we just can't complete the procedure. So we can't say that's the case. So with the timesheet, that's our goal there, is to make sure we're understanding that breakout of time. Now, if we go to the next piece of supporting documentation, that's going to be our request for the employee offer letter. Right, there might be a delay again, just probably experiencing that on my side, but I'll go ahead and speak to it here as it's loading up. The offer letter is something we're requesting because we want to understand that the individual whose time is being applied to the grant, that they were hired into this role as a DVOP or a leaver. So we ask for that offer letter just to make sure that the individual, whomever that may be, is appropriately in this role. And so you can see here in this offer letter, clearly we've had some information redacted out just for privacy reasons. We can see we have highlighted there that the offer letter is clear that this individual was hired into a DVOP role. Additionally, on this offer letter, things we're looking at is whether or not this is a full-time role or a part-time role. So here again, you can see in that second paragraph that this person is being hired into a full-time position with 37.5 hours per week. And what you can't see here, but what was in here as well, is the pay information. So now we have all the pieces we need to really prove out the payroll costs for this individual. We have what their pay rate should be. We have, in this case, that they're a full-time employee. We have the role that they're in, and then we have the hours that are charged from the timesheet, and we combine all that together. Now we have that payroll cost. Then we have the benefit election forms, so we can see what their benefits are that are being applied to the grant. And once we have all those pieces of information, it really helps us, check the box here and make sure that we've been able to validate those costs. And once we have all those pieces of information, we have everything we need to do it. And I think where we run into challenges when we're doing this is we're missing one piece of that. So we may have a pay stub, so we can see that the pay stub clearly matches the transaction detail. But the question for us is, well, how many hours were charged to this grant, right? Is it a full-time employee, so should it be the entire amount, or is it a part-time employee whose only portion of those costs should have been allocated? And without that information, we can't complete the procedure, and so we're left having to say that a portion of these costs we couldn't determine whether or not it's appropriate because we are missing that information. And once we have the pay stub, you'd think, okay, well, now we have the pay amount, but we want to know, well, what is the individual supposed to be paid, right? And we can't use the pay stub to validate that because that's just the cash that went out the door. That's not really supporting what the individual should have been paid. So those are the things we look for payroll. Now, the next slide we have is just some comments on expectations. So what are we expecting as the auditor that's coming out there? So supporting documentation in general, what we're looking at is that the documentation be readily available, right? That's the requirement under the Green Book control standard, is that when an auditor comes in, they should be able to request the documentation and that documentation be readily available. That doesn't mean the documentation needs to be turned around in 30 minutes or an hour, but if there is a lengthy time required to get that documentation to us, that in and of itself can be a challenge that we have or something that we might need to highlight. Second, when we're receiving the documentation, we really want to make sure that we see how that documentation supports the cost on the grant. And so we had mentioned earlier that one of the first things we do under reporting is try to make sure that those FFR EDR forms agree to the transaction detail. From there, we're selecting those costs that we want to audit, and that's the number we need to get back to. So when we ask for that support, it's helpful to have that check be done already to say, hey, here's the support you're providing to us. Does the dollar amount on that can I get that to agree to that Excel file listing that you had provided to us? And if not, that's where we're going to have additional questions as auditors. We're going to say, okay, well, help us connect the dots. Help us bring together whatever amount is on the Excel transaction detail to what's on that PDF, that scanned invoice, that timesheet, that pay stub. And that's where the disconnect can occur. The last item is the retention requirement in the terms here are at least 3 years after submission of the final quarterly report. So again, there is an expectation not just that the supporting documentation is readily available, but that it is maintained. So although we might be looking at a scope period that's a year behind, that documentation should still be there for us to take a look at. Let's go to the next slide here. And on this slide, what we have are potential questions to ask yourself. So as you're thinking through this, if you're getting selected as one of the grantees to go through the process, first ask yourself, is the supporting documentation readily available? If I got asked to provide support for payroll, do I know where to go to get that support? Do I know whom to ask for the benefit elections forms? Do I know where to get the timesheets for? Do I know who to get the offer letters for? If it's a service contract, where do I get that contract? Where is it maintained? Especially maybe if it's a service over a couple of years, and so the contract was signed a year ago, maybe 2 years ago, and you're still incurring a cost over the life of that contract, right? Make sure you can ask yourself, or you can answer that question if you ask yourself, where is this documentation? Second, when you have dates for costs that are overlapping grants periods or don't necessarily correspond to the grants period, how are you able to reconcile that? Could you answer the question of the auditor that says, okay, well, this cost seems to have occurred before the grant period or after the grant period? Can you explain to the auditor why that cost was appropriately split across 2 of these grant periods or was allocated fully to the previous grant period, knowing that there is a larger window of time to recoup these costs for these particular grants? But could you answer that question? Is that documented somewhere so that you wouldn't have to recreate it when you're being asked that if you should go through the process? The last item we have here is a question to ask yourself about employees who split time. Now, if you're DevOps, your leavers, or full-time employees, that's a bit easier, right? Because all of their costs are being allocated to the grants. All of their benefits are being allocated to the grants. So that's an easier thing to reconcile. But if you've got some part-time folks that are splitting their time amongst other grants, how is that being tracked, right? How would you demonstrate that to the auditor to say, okay, you know, this individual spent 3/4 of their time on grant A and 1/4 of their time on grant B. So where was that documented? Where is that clear? Is the timesheet sufficiently clear to demonstrate how their time is being split up? And then, excuse me, are the benefits being split up as well, right? So if their direct time, their hours being charged is being split, are the benefit costs also being split? So make sure that those 2 stay in alignment. So that's the last slide we had for that 3rd category, the supporting documentation category. What we're going to do now is move into the 3rd module, which is just some leading practices, some slides we have here to really just help you all out. You know, for those that have gone through the process, you've helped us build this knowledge base. But having done a number of these before with some other clients that we have, these are just some thoughts that we wanted to share with you all to make sure that the process is as painless as possible and takes the least amount of effort as needed to get through it. So let's go ahead and jump to the next slide. Just some best practices here, or leading practices that we have. And the first one we have is cross-training of individuals. And we see this at a number of places where, you know, there's one individual that has all the knowledge, that understands how the costs are being allocated, that understands how the system pulls the information, or that is the one who's responsible for pulling together all the reporting. And when that individual gets to retire and, you know, not have to worry about FFR forms or EDR forms anymore, sometimes that knowledge is lost. So it's important to be able to cross-train individuals so that others have that same skill set, or make sure that that information, that knowledge is documented somewhere so somebody else can pick it up and have maybe a lower learning curve or less steep learning curve to pick it up. So that cross-training of individuals is always helpful. The second thing we have is just understanding these tasks, the requirements of the grants, and that's where we're really looking for just folks to have those trainings. Make sure if you're taking the opportunity to do some of the free trainings. We have a slide here in just a bit where we're going to share some trainings that are available in Workforce that are free. You sign up for a Workforce account, and you can take these trainings. Those are the type of things that it's good to suggest for your folks to, hey, take this training, just refresh your memory on some of these things. And in some cases, there's no cost to this. So that's even better. Now, the third bullet we have here is about the information systems. And what we really want folks to know is just how the information system is handling that processing of data. So what reports are you getting out of your system? When you're recording these entries, when you're recording the amounts onto your FFR EDR amounts and you're pulling that, what reports are being run? Where is that information coming from? What are the parameters that are used to pull those reports? And those are the type of things that if it's documented, if you understand that, it can be replicated when we as the auditors come in and start asking questions about how these things are done. So having that documented is appropriate. And then think about how you might generate that transaction detail, right? So, for the individual that is creating the FFR and filling out that information on a quarterly basis, are they the only ones that know how to pull that transaction? What is the level of detail there? Is it enough for an auditor to come in and be able to pick something off of that, pick a cell, one of those costs that are showing up on the list, and could you be able to then go back and find the cost associated with it? So ask yourself, could you do that? And if you can't, great. If not, maybe that's what you can work on and say, hey, how does this work? And maybe I can have a call with the person responsible for running the reports, or maybe the person responsible for the IT system, and just get a little bit more information on that. The last thing we have here is understanding how your system calculates the indirect costs. So if your system is calculating your indirect costs for you, there's some kind of allocation methodology that the system is using for you. Make sure to understand how the system does that. So where are the inputs coming from? So if it's being driven by hours onto the grant, how is the IT system pulling that? Is it going to the payroll system and then pulling hours for the month and then doing the calculation against it and applying the costs? Is that what's occurring? Or if it's square footage, does somebody have to get that square footage information, input it into the IT system, and then it calculates the entry for you? If you don't know those questions, that's what we're trying to figure out as we come out as your auditors and figure if these allocation costs have been done correctly. So again, something to ask yourself with these IT systems, and that's just a call to them, whomever might be responsible for it. And if you can do that before we're out there, that's even better, because that just makes that audit process work a bit faster, and that information and it's readily available. So let's go ahead and go to the next slide, which is our last slide for some of these leading practices that we have for you. And on this slide, the first thing we've got is clear and well-documented support for the adjustments. And this is where we're talking about here is the cost moves. So knowing that with this grant, you have the ability to kind of move some of those costs and recoup it. If there's some money left over from the previous year, you can move some costs there. When we come out as your auditors and we're looking at that, we understand that occurs. But the question we're going to have is, how are those costs captured and how are they moved back? So is that documented? Could you replicate that? That's what we'd ask of you. Second is, if you have internal controls, where are they documented? How is that document? One of the first slides I showed was that for one of the entities that we looked at, there was no approval for those incentive payments. They certainly were, right? Certainly somebody out there was saying, so, okay, these are the payments, this is going to be approved, but nobody kept the email. Nobody kept, there wasn't a sign off on a piece of paper to demonstrate that happened at the time the incentive awards were going to be paid out. So the last, or excuse me, the third item we have here is just appropriate knowledge and understanding of the guidance. So knowing when to go to the special grant term provisions, knowing when to go to the terms and conditions, knowing that those exist, knowing the rules and requirements under the uniform guidance, just having that knowledge and knowing where to go can be very helpful in trying to get your questions answered. The other item is here, making sure that you have timely reporting and drawdown. So if there are going to be delays in reporting, that's going to cause questions. It's the folks are going to ask, well, what's going on here? Why is there an issue? Making sure you have that explanation readily available, that could help get past those challenges that much faster. Secondly, being aware of when your drawdowns are occurring. How often are you doing it? Is in some cases we've seen weekly, in some cases we've seen it happens the day after or 2 business days after, once the costs have been allocated to the grant. So, a report is run to pull down those costs from the system. And so do you know that? Do you understand that? How often is it happening? And then the last 2 items we have here is, number one, if there are questions, that's the DVETs are there. They can answer those questions, reaching out to them. It's always best to make sure you're reaching out. If you're unsure, if you're not sure you're interpreting the guidance right, be sure to ask the question, because that's what they're there for, to make sure that everything is done in alignment with the requirements. And the last item we have is whether we're identifying findings as a part of our audit here for vets, or if you have other findings that are coming out of maybe a single audit or some other audit that's been performed. Create corrective actions, right? Corrective actions, identify what are those things that you could implement to address those findings. What are the tools that you need? What are the resources that you need? And that's always helpful to making sure that that issue, that finding doesn't arise again the next time the auditors have to come in. So let's go ahead and go to the next slide here. And so once this slide loads up here, what we have here is just some key points we wanted to take away as we've gone over this. So we've had the chance to audit. I think we're just wrapping up our last few audits here for the first option year we had. We completed 12 audits for the base year. And so we're gathering this information, we're sharing it with you. So here's just a couple points. Number one, does the documentation sufficiently support expenditures, the period of performance, and applicability to the grant? If you're looking at that documentation before we do, could you say yes to each of those questions? Second, can the amounts reported to vets be supported and reconciled to the total transaction detail? That's going to be one of the first things we do when we get the supporting documentation for you. We're going to want to get that reconciliation. So to avoid delays, can you answer yes to that? Third, is there an adequate audit trail from the amounts reported to the underlying transactions? This tends to be the challenge when we're talking about allocations and other costs, AS&T costs that are coming through. Can you get from that transaction detail back to that PDF, that email from central payroll that shows the costs that are being allocated? Is there a clear line there? Is there a reference number, some code that will help you get back to it? And then lastly, does the documentation sufficiently support the selected expenditure category and or if there's been an allocation? So in order to avoid some of those issues where the costs are ending up on the wrong line, does it fit in the right bucket? Are you sure you're getting those costs into those right buckets? So hopefully those key takeaways, if you're thinking about how you can say yes to each of these items, and you have the tools, resources, and the contacts within your organization to say yes to these items, it's going to serve for a better, more efficient, effective audit. And that way we can get out of your hair as quickly as possible and just get to the right answer. So the next slide we have here is just, I said before, a listing of potential training. So on Workforce, you've got these trainings here. You can search for SMART 3.0 webinar training series. There's a number of modules in this grant training series. So I've highlighted just a couple here, modules 2, 4, 11, and 15. Those trainings have some specific items in there: cost principles, records management, allocation plans, financial management items. Take those if you think that they would be helpful there. They're there for you. We've also listed here as the last item that we did a similar training last year where we debriefed the items we encountered with the first set of audits that we have done. That's always a great idea. If you missed that the first time we did it, it was recorded. It's available. You can go back to that and take a look at that, and then watch this one again. This training's being recorded. If you've gotten a lot of great information today, maybe what you can do is in a couple months' time, or if you find out when the next elections come through that your state is undergoing or your agency's undergoing it, come back and watch the video again and get these hints, get these tips to help make sure we have a successful process. So with that, we've ended with our prepared material for these trainings and tips here. The next slide we have is just simply opening up to questions. So me, Wendy, and Lucy, we're excited to hear if you have any thoughts, any questions, anything you'd like to share. All right, I'm not seeing anything come in, so back out of, oh, there we go. Fantastic. Just a delay on my end. Dorothy, I see you have your hand up. If you want to put your, I'm sorry, I'm seeing a couple of questions come in, so just a delay on my side. So Dorothy, I see you have your hand up. We can start there.
Yes, can you hear me okay?
Well, I can, yes, thank you.
Yes. No, I just wanted to make the comment, because, we've in our state have just gone through the process that for the level of detail that was requested in our review, it was like it was a deeper level of detail than what we had seen in prior reviews, and especially when you have like a centralized payroll, which is a different organization within the state. We don't have necessarily access or immediate access, to some of the requested information, like, for example, benefit enrollments and those details. We just don't have that information. It is available within the state system, but it's just not immediately available. And so my comment basically is to allow for that, and then, to allow for additional time or to direct those requests for information to the other entity within the state. Paul, please jump in if I'm not putting this correctly. So it was just new to us, the level of detail that we saw, and it was not always available as quickly as you probably would have wanted, if at all, or in the format that you have.
Dorothy, thank you so much. Yeah, absolutely. Great point sharing that. That sometimes you might not be expecting it. And we're so glad we were able to share some of that today, getting into that detail to help others prep for that. I see another hand up. Paul, is that you? Paul, you're muted.
Excuse me. So yeah, I agree with Dorothy. We kind of felt like we were getting into the minutia of things, and my thinking was is the materiality and cost benefit there. So on millions of dollars, is it worth investigating a $2.02 question kind of thing? So was just wondering, and I put a little thing in the chat.
Yeah.
Given the materiality levels that I was seeing, what's the level of assurance in an audit of this nature? Because I know it was a performance audit.
Right.
So
right.
You're looking for like 100%, 90, reasonable assurance.
Well, that's a great question, Paul, and I'm glad you asked it, because it does help us reinforce one of the things that we mentioned right at the beginning, which is, we're not conducting a financial statement audit. We're not conducting a single audit. We're not opining on the costs or the reports that are being formed. A performance audit, we're looking at a specific subject area, and then we're comparing that to the criteria. So in this case, we're looking at the JVSG grant costs as the specific subject, and then we're looking at the criteria, which is what is defined as allowable in the terms and conditions, the provisions, and in general under the uniform guidance. So when we select our sample, that's our target. Our target is to select samples with enough samples to be able to conclude to say that the costs that were applied are appropriate for the grant. And I think that that's the question we're trying to answer. So when we get down to these small differences and we're looking at it, we want to just make sure that we understand what's driving that difference, because our goal is to be able to identify if there's a broader issue that we can share and bring to a training like this. Is there something else there that needs to be identified? Is there further guidance that needs to be issued? So it's certainly going to be different than, you know, a financial statement audit or a single audit that many of you may be familiar with if you've had your single auditors coming in and taking a look at this program or another program that you manage. So appreciate that insight, Paul.
Thank you.
I see there's another hand up, and we got a couple more questions coming in the chat here. I'm trying to, I only see that a hand's come up. I don't see the name of the individual. Is that?
Musamil?
Oh, Musamil? Yes, please.
Yes. Yeah, and that name is a little bit challenging to say. So quick question. Earlier you had said something about videos readily available for us. Can you provide us that link to look at these videos?
Sure, absolutely. We'll share that link. I think we can. We'll get that link out to you. We'll work with BAC to make sure that's communicated out as part of this.
Appreciate it. Thank you.
All right, I don't see any more hands up. I do want to make sure we address the comments in the chat here. So just looking back at this, Lori and David, you both have questions about the next round of audits. Let's see here. Beck, I might just turn it back to you here to share information on the status of our next round.
Sure, I'll take those on. Okay, so the next round of audits, which program year data will be audited? We do audit on a fiscal year basis, not program year. And I think for the next round, we're aiming for the FY22 fiscal year. So I hope that answers your question, Lori. David, you asked if we can share the dates and states we're planning to visit next. Those are still in somewhat of discussion right now, but those will be coming out in the next couple of months or so, when our agency has chosen the audits, the states to be audited, and the HBRP recipients to be audited, and then KPMG has a process that they go through to make sure that it's in line with their organization. So at this time, like today, we can't share those states quite yet. It's coming soon.
Got it. Thank you, ma'am.
Welcome.
All right, and I see one question in here from Jeffrey Dent. Jeffrey, we'll share those links with you here.
Yes, I'm sorry, I hadn't scrolled down all the way, Jeffrey. So the webinars and trainings, we're not just talking about the NBTI sessions or VETS webinars. We've got Workforce GPS has the trainings that Alan showed on a slide earlier. So those are one option. The webinar he referred to that we held about a year ago, that's available on NBTI's website under the webinars.
Thank you. Being a new JVSG program coordinator, we're currently at the last leg, and I would say next week, rounding up our exit interview. So I wouldn't say it was overwhelming, but it's an eye-opener.
Thank you for that feedback. I see Dorothy's got her hand up again.
Yes, me again. No, I just wanted to say, this is great information, and so I'm really, we're really, I think it's great that you presented this information. I just wish that we had it before our before our monitoring, before our review. So but this is great information. So thank you.
Thanks, Dorothy, for sharing that. Absolutely. We appreciate from all the grantees who have gone through the process. It's going to be 21 grantees for the JVSG grants. By I think the next few weeks, we'll be wrapping up the remaining grantees that we have. And we really do appreciate all the efforts from all those folks who have helped us go through this process. And again, we hope that some of these shared stories here can just help that process move even better for the folks here that are going to be next in line. Okay, so I don't see any more questions in the chat and no hands raised. So just give it another minute, I guess, before Beck, if you want to close this out.
Okay. While the group is thinking about their next questions for you, please do feel free to continue raising your hands and putting questions in chat. Okay, we've got is DOL planning for KPMG to audit all states with JVSG. We are taking it 1 year at a time and going from there. At this point, we can share that we plan for 8 or 9 states to be audited this fiscal year, and then after that, we'll see where we are and continue our work. Thank you for your question. So I want to thank KPMG for laying out the training so well. You guys, they were really intentional about finding the areas that they could best present to you that would probably have the highest impact for things that you can change or be aware of in your everyday jobs. So I really appreciate KPMG laying all that out so well. And then thanks to you in the States for asking your questions and giving feedback. We take that really seriously. We love getting your feedback about how these audits are going. When we hear your questions, then that teaches us more about what confusion there might be out there. So one example of how we implement your feedback to make the program better for everyone is, so this audit process has been influenced by your notes to us along the way. So during the first year, we received feedback from you that you didn't have enough time to gather and submit the copious amounts of documents that KPMG needs in order to, conduct their field work, their field testing. So now we implemented a change so that KPMG will notify you that you've been selected for an audit much earlier in the process, sometimes months in advance of when they need your documents to be submitted. They've always worked with you on the timing of those audits because we know you have other commitments and other things that may go on at different points of the year. But now that flexibility has expanded even more. So thank you. Please continue giving us your feedback, and we'll continue working to implement that any way we can. Okay. So I think that's it for us. Thanks again, KPMG folks. You did a great job. Thanks, states, for showing up here and being engaged. And for those of you who recently completed an audit and showed up to share your experiences with your counterparts, that's really helpful too. So thank you. Okay, we had a comment. What's this? I'd remember more when I learn about audit findings versus what was done right. Are you saying that you want more audit findings? Because KPMG can focus really hard on your state to find audits that you can learn from. The methodology used to determine which states get audited. It's pretty complicated. I think in vets, we like to share the load among the regions. So each region has so many states, and we don't want the same state to get selected each year. So it's some mix of putting names in a hat and making sure that no one region is overburdened in a single year. Thanks for that question. Do we have any others out there before we close it up for the day? If you do, please submit that up through your through your Goder, and of course continue pushing those questions up to us. I will get back with you when we can about with a copy of the Section 508 compliant PowerPoint slides with a recording of this session today, and of course with the active links to the trainings and webinars that are available for you to learn from. That's it from us. Thank you, everyone. Much appreciated. Have a great afternoon.
Thank you, everyone.
Thank you.